There's an economic hurricane forming, an event that could redefine what wealth even means, and most people are just standing on the shore, completely unaware. Michael Saylor, one of Bitcoin's most prominent advocates, believes he can hear the storm warning. He's not just suggesting you find shelter. He's practically handing you the keys to a bunker, and those keys cost less than you might think. He's convinced that for the price of a decent smartphone, you can lock in a real stake in the future of money. His urgent message is that owning just 0.01 Bitcoin isn't a wild gamble anymore. It's an essential strategic move. But the window to make this move is closing, and it's closing fast. This isn't about getting rich quick. It's about not getting left behind. What if I told you there's a new kind of property, a digital territory, and a global land rush is happening right now, almost silently? We're not talking about physical land. We're talking about digital real estate. And according to Michael Saylor, the executive chairman of MicroStrategy, this is the most valuable real estate in human history. For years, Saylor has been on a crusade, not just pouring billions of his company's money into Bitcoin, but preaching its virtues with an almost religious zeal. His core message has sharpened. It's no longer about if Bitcoin will succeed. In his mind, that's already settled. The new conversation is about how you, the individual, can claim your spot in this new economic order before the gates swing shut for good. The numbers are getting wild. With Bitcoin's price having touched highs many thought impossible, owning a whole coin feels like a distant dream for most people. But Saylor's advice is getting more specific, more urgent, and more doable. He's zeroing in on an achievable target, 0.01 Bitcoin. That isn't some random number. It's a calculated slice, a meaningful stake in a system defined by absolute scarcity. In this video, we're going to unpack Michael Saylor's powerful, multi-layered argument. We'll explore why he believes 0.01 Bitcoin is the new minimum for anyone serious about building and protecting wealth in the 21st century. We're going to deconstruct his entire philosophy, from seeing Bitcoin as the ultimate property to the supply and demand shock he believes is about to send its value to the moon. Most importantly, we'll lay out the precise, actionable blueprint he has shared, the exact steps you can take to follow his advice starting today. This isn't just another Bitcoin video. It's a guide to understanding a massive paradigm shift seen through the eyes of one of its most influential architects. Get ready to have your ideas about money, property, and wealth completely challenged. Let's just start with the elephant in the room, Bitcoin's price. When people see a price tag that has flirted with levels over $100,000, their first thought is often, well, I've missed the boat. This is a huge psychological mistake, a failure to understand just how divisible this new asset is. Michael Saylor argues that thinking in whole coins is now obsolete for most of the world's population. The real game has moved to the fractions. That number, 0.01, isn't just a tiny piece of the pie. It represents a new kind of digital ownership. There will only ever be 21 million Bitcoin. Full stop. That's not a corporate promise. It's a mathematical certainty baked right into the code. Because of this absolute scarcity, owning one full Bitcoin is already a privilege reserved for a tiny sliver of the global population. Let's do the math. If you divide 21 million coins by the world's population of roughly 8 billion, it's obvious that not even every millionaire on Earth could own a whole Bitcoin. But what about 0.01 BTC? If every one of the 21 million Bitcoins were split into 100 parts, you'd have 2.1 billion of these 0.01 BTC pieces. That means even in a perfect world, a maximum of 2.1 billion people could ever own this amount. In reality, the number is much smaller. It's estimated that millions of Bitcoins have been lost forever. On top of that, large corporations like MicroStrategy and now massive ETF funds run by giants like BlackRock and Fidelity are acquiring huge quantities of Bitcoin from the market, holding them for the long term. This is the core of Saylor's argument for why you need to act now. He sees a future where owning 0.01 BTC will carry the same weight and status as owning a whole Bitcoin does today. It's all about getting off zero. He emphasizes that moving from 0 Bitcoin to any amount is the single most important step. Buying that first 0.01 BTC is your entry ticket. It gets you on the network. It shifts your entire mindset, and it puts you in a position to benefit from what he sees as inevitable economic forces. At an example price of, let's say, $89,200 per Bitcoin, getting 0.01 BTC would cost you about $892. For many, that's a doable amount. The cost of a new phone, a weekend getaway, or a few months of streaming services. Saylor argues this small investment isn't like buying a tech stock. It's an acquisition of a piece of pristine, digital, global property. It's like buying a small plot of land in what he believes will become the world's most valuable city. The mistake, he says, is looking at this $892 expense like a traditional investment, hoping for a 10% or 20% annual return. He wants you to see it as grabbing a lifeboat before everyone else realizes the ship is taking on water. He famously said that the time-tested way to get rich is through levered long property, buying scarce, desirable property and holding on tight. In our digital world, he argues with total conviction, Bitcoin is that perfected, scarce, desirable property. So owning 0.01 BTC isn't a small speculative bet. It's a foundational move to secure your long-term store of value, an insurance policy against the endless printing of traditional currencies. To really get the urgency behind Michael Saylor's advice, you have to understand his core philosophy. He doesn't see Bitcoin as a currency, a tech stock, or even just another commodity like gold. He uses a framework that's way more powerful. Bitcoin is digital property. In fact, he sees it as the perfection of property itself. Let's break down what he means. For centuries, people have tried to store their economic energy, their life's work, in things that will hold value over time. Think real estate, gold, stocks, and bonds. But according to Saylor, every single one of these has critical flaws. Take real estate. It's often seen as the ultimate store of value. But it's not liquid, it's expensive to maintain. It comes with high taxes, and it's stuck in one place. You can't move your building from a dying city to a booming one. It can be seized, and its value is totally dependent on the laws and stability of the government where it's located. Saylor pulls no punches, calling real estate a high-maintenance and inferior asset for preserving wealth long-term. What about gold? For thousands of years, it was the best we had. It's rare and it lasts, but it's hard to verify, expensive to store securely, and a pain to move. Sending $1 billion worth of gold across the globe is a massive, slow, and risky operation. Then you have stocks and bonds. These aren't really property. They're claims on a company's future profits or a government's promise to pay you back. They carry huge counterparty risk. A company can be run into the ground. A government can default on its debt or, more sneakily, just print more money and inflate its debt away. When you hold a stock or a bond, you're betting on executives, market whims, and political stability. This is where Bitcoin comes in, as Saylor sees it, as the ultimate solution. He argues it has all the good parts of property with none of the old world baggage. First, it's weightless and global. You can send $1 billion worth of Bitcoin across the planet in minutes for a small fee, just as easily as you can send $1. It doesn't rust or decay. It's pure digital energy. Second, it has zero counterparty risk. The Bitcoin network isn't a company. There's no CEO to mess things up and no government that can just change the rules. Its 21 million coin limit is enforced by a global, decentralized network of computers, making it the most predictable monetary policy in history. Third, it's globally accessible and divisible. Anyone with an internet connection can own it, and you can own a tiny, tiny fraction of it. This opens up property ownership on a scale we've never seen before. And fourth, it's becoming a recognized capital asset. Saylor makes a key distinction. Bitcoin isn't here to replace your dollar for buying coffee. You don't use a piece of your house to buy a latte. Bitcoin is a capital asset, a long-term store of value, like a prime piece of real estate in Manhattan. It's what you own to protect your purchasing power for decades, or even for the next generation. He repeatedly advises treating it as a long-term holding, suggesting a minimum of 4 years, but preferably 10 or more. He believes Bitcoin is a superior technology for storing value. To him, every dollar held in a regular currency is like a melting ice cube. Bitcoin, on the other hand, is a block of what he calls crystallized, monetized energy. This is why he doesn't just recommend it. He preaches it as the only rational place for long-term capital. If Bitcoin's design as digital property is the why, then the current market is the why now. Michael Saylor believes we're right on the edge of a massive supply and demand squeeze that will blow past anything we've seen before. The logic is simple, powerful, and, if he's right, a complete game changer. Let's start with supply. We already know about Bitcoin's absolute scarcity, a hard cap of 21 million coins. The supply schedule is completely transparent. Approximately every 4 years, an event called the halving cuts the creation of new Bitcoins in half. The 2024 halving, for instance, slashed the number of new Bitcoins made each day from around 900 to just 450. Historically, the periods after a halving have led to major price jumps. But Saylor argues that this old 4-year cycle has been completely upended by a new, much stronger force: demand. For Bitcoin's first decade, demand came mostly from retail buyers, tech nerds, and a few visionaries. The institutional world, pension funds, corporate treasuries, and governments, was on the sidelines. That has all changed. The turning point was the launch of spot Bitcoin ETFs in the US in early 2024. All of a sudden, financial giants like BlackRock and Fidelity gave massive pools of capital a simple, regulated way to get into Bitcoin. The result has been a demand shockwave. On many days, these ETFs have bought up way more Bitcoin than is being newly created. This is like trying to fill a swimming pool with a garden hose while a dozen industrial pumps are sucking the water out. Saylor paints a vivid picture. The publicly available supply of Bitcoin is shrinking fast. It's being pulled off exchanges and moved into the hands of long-term institutional holders who see it as a strategic reserve, not a trading chip. His own company, MicroStrategy, is a perfect example, having steadily bought up hundreds of thousands of Bitcoin with one simple strategy: we accumulate and hold. He believes this institutional flood is just the warm-up act. We're watching Wall Street get orange-pilled, and soon he predicts sovereign wealth funds and even nations will follow. As these multi-trillion-dollar players start to put even a tiny fraction of their portfolios, say 1% or 2%, into Bitcoin as a hedge, the demand will become a tidal wave, crashing against the shrinking wall of available supply. This creates what he calls relentless upward pressure on the price. It's just pure economics. When a flood of new money chases a strictly limited number of goods, the price has to go up. Salem argues this isn't a bubble. It's a fundamental repricing of a new asset class as the world finally wakes up to its unique properties. This is the heart of his urgency. The digital land is being bought up. The window for the average person to afford a meaningful piece, that 0.01 BTC, is closing. Every day that Wall Street buys thousands of coins is a day that the price of admission gets higher for everyone else. He's not just suggesting you buy a piece of the network. He's warning that if you wait, the network might become too expensive to join in any meaningful way. Understanding Michael Saylor's philosophy is one thing. Doing something about it is another. He's been incredibly clear in laying out a practical blueprint for everyday people. This isn't some complex trading scheme. It's a disciplined way to acquire and protect wealth for the long haul. Here is the 5-step plan straight from his playbook. Step 1. Do your homework. The 100-hour rule. Before you invest a single dollar, Saylor insists you invest your time. He famously advises that everyone should spend 100 hours studying Bitcoin. He's adamant. This is the non-negotiable first step. You need to understand what you're buying, why it's valuable, and what makes it different from everything else. Read books like The Bitcoin Standard, listen to podcasts, and get the basics of the tech, the monetary principles, and the history of money. Why is this so important? Because without conviction, you will lose. Bitcoin is volatile. There will be gut-wrenching price drops. If you only invested because someone on the internet told you to, you'll panic and sell at the first sign of trouble, probably at a huge loss. But if you've put in the 100 hours, you'll see those dips not as a crisis, but as a buying opportunity. You'll have the mental strength to hold on, because your belief in the asset won't be tied to its daily price. This education is your shield against fear. Step 2. Get off zero. Secure your 0.01 BTC. Once you've built that foundation of knowledge, it's time to act. The immediate goal is to get off zero and get a real stake in the game. As we've covered, Saylor's recommended starting point is 0.01 BTC. This is your ticket in. It moves you from being a spectator to a participant. Find a reputable, trusted cryptocurrency exchange. Do your research. For this first purchase, the process is simple. Create an account, connect your bank, and make the buy. Don't overthink it or try to time the market perfectly. The goal isn't to get the absolute best price. The goal is to secure your spot on the network. In Saylor's view, the cost of waiting is far greater than the risk of buying at a temporary high. As he said, he'll be buying Bitcoin at the top forever. Step 3. Stack sats with dollar cost averaging, DCA. After your first buy, the strategy becomes all about steady, disciplined accumulation. Saylor is a huge fan of dollar cost averaging, or DCA. It's a simple but powerful strategy. You invest a fixed amount of money into Bitcoin at regular intervals, like weekly or monthly, no matter what the price is. DCA is the perfect antidote to volatility and emotion. If the price is high, your fixed amount buys a little less Bitcoin. If the price is low, that same amount buys you more. Over time, this smooths out your average purchase price and stops you from making the classic mistake of buying high out of FOMO and selling low out of fear. This is how you turn volatility into your friend. For an individual, it could be as simple as setting up an automatic recurring buy of $50 or $100 every week. It's a set it and forget it approach that builds your wealth methodically. Step 4. Secure your digital property with self-custody. This might be the most important step for long-term holders. Remember Saylor's core idea. Bitcoin is property. If you own a house, you hold the deed. If you own Bitcoin, you must hold the private keys. Leaving your Bitcoin on an exchange is convenient, but it means you don't really own it. The exchange holds your keys, and the saying goes, not your keys, not your coins. You're exposed to the risk of the exchange getting hacked, going broke, or being shut down. To take true ownership, you need to move your Bitcoin into self-custody, usually with a hardware wallet. These are small physical devices that store your private keys offline, making them immune to online attacks. Learning to use a hardware wallet is a vital skill for anyone serious about holding Bitcoin for the long run. It's the final step in declaring your own monetary independence. Step 5, zoom out and think in decades. Finally, you have to adopt a long-term mindset. Stop checking the price every 5 minutes. Think in years and decades, not days and weeks. Saylor's entire strategy is built on a 4 to 10 year time horizon, at minimum. He's not a trader, he's a capital preserver. He sees Bitcoin as a savings technology, a way to launch your economic energy into the future. This also means being smart about risk. Saylor explicitly advises against taking on debt, selling your house, or quitting your job to buy Bitcoin. For most people, he suggests starting with a small allocation, treating it like an insurance policy. You should only invest what you are prepared to hold for many years. His famous line, "You do not sell your Bitcoin," isn't just a catchy phrase. It's the strategic conclusion of his entire worldview. You acquire it, you hold it, and you let it do its job. So where is this all heading? Michael Saylor isn't afraid to make some seriously bold predictions about Bitcoin's future, but they're based on a logical, if ambitious, framework. He sees a future where Bitcoin doesn't just do well. It becomes the bedrock of the entire global economic system. Let's look at his price targets, which can sound pretty wild at first. He has made forecasts that put Bitcoin at $1 million per coin. Looking further out, his long-term models project that Bitcoin could eventually reach a value of over $10 million per coin. Now, these are his models, and they're ambitious, but they aren't just pulled from thin air. They're based on Bitcoin capturing a percentage of the total value of all global assets, a number in the hundreds of trillions of dollars. He argues that as other stores of value like gold and real estate prove to be flawed, capital will naturally flow from those weaker assets into the superior digital property of Bitcoin. Let's make that real. If Bitcoin were to reach $1 million per coin, your 0.01 BTC, which you might buy today for under $1,000, would be worth $10,000. If it hits a long-term target of $13 million per coin, that same 0.01 BTC would be worth $130,000. Suddenly, that small, disciplined investment becomes a life-changing amount of money. But Saylor's vision goes way beyond price. He sees Bitcoin becoming the world's main reserve asset, a neutral, apolitical foundation for a new, stronger financial system. He talks about a world where Bitcoin acts as digital capital, the ultimate collateral that could be used to back loans and other financial tools anywhere on the planet. He even sees a path where a country like the United States could adopt a strategic Bitcoin reserve to cement its economic leadership for the next 100 years. In his view, adopting Bitcoin isn't just an investment, it's a strategic necessity for individuals, corporations, and eventually nations. He believes that as Bitcoin matures, its crazy volatility will calm down. The gut-wrenching 80% crashes of the past will become a thing of the past as the market gets bigger and is dominated by long-term players. This is the end game, according to Saylor, a global, decentralized, fair, and transparent store of value for everyone. Owning 0.01 BTC is your claim on that future, your stake in the new network. It is, in his words, how you join the team. If Michael Saylor's vision makes sense to you, and you feel ready to take that first crucial step of getting off zero, the time to start learning is now. The information is all out there, and the path he lays out is clear. Start your 100 hours of education today. Subscribe to this channel for more deep dives into the strategies and ideas shaping the future of money. We break down complex topics into clear, actionable advice to help you navigate this new world. And we want to hear from you. What's the single biggest question or hesitation you have about buying your first 0.01 Bitcoin? Drop it in the comments below. Let's start a conversation and learn from each other. We have just taken a deep dive into the mind of Michael Saylor, one of the most important voices in the Bitcoin world. His message isn't about hype, it's about strategic urgency. His argument is clear. Bitcoin isn't just another investment, it's the evolution of property itself, a better technology for storing your time and energy. The advice to buy 0.01 BTC isn't a casual tip, it's a calculated call to action. It's a reachable entry point into an asset that is seeing unprecedented demand from the biggest financial institutions on Earth. The supply is fixed by math, while the demand, he argues, is just getting started. Following his blueprint is simple, but it isn't easy. It takes a commitment to education to build real conviction. It demands the discipline of dollar cost averaging to build your stack unemotionally. And it calls for the responsibility of self-custody to claim true ownership of your digital property. The future Saylor imagines is one of huge economic change, where a small, early stake in the new global asset can create a foundation for generational wealth. The digital land rush is happening right now, in plain sight. Michael Saylor isn't just giving you a map. He's pointing to a specific plot of land, a 0.01 BTC plot that's still within reach. The institutional ships are leaving the harbor. You don't need to own the whole ship. You just need to make sure you have a ticket.